The year is 2025 and the world watches with bated breath as a trade war of unprecedented scale unfolds. The opening salvo came from Washington, where President Trump, true to his word, levied a hefty 104% tariff on Chinese goods entering the United States. This audacious move, the latest in a series of escalating trade tensions, sent shockwaves through the global economy. China, refusing to be cowed, retaliated swiftly with an 84% tariff on U.S. products. The world was now on notice. The era of unfettered global trade was over. The rules of the game, painstakingly crafted over decades, were being torn apart. What remained were uncertainty, fear, and the chilling prospect of a full-blown trade war. This tit-for-tat tariff battle, the culmination of years of simmering trade disputes, marked a dangerous escalation in the U.S.-China rivalry. It also signaled a broader shift away from the principles of free trade that had underpinned global prosperity for decades. The world held its breath, bracing for the fallout. The reaction from global markets was immediate and visceral. Stock markets from New York to Tokyo plunged into the red, with investors dumping equities in a frenzy of fear-driven selling. The S&P 500, a bellwether for U.S. corporate health, flirted with a bear market, shedding almost 20% from its recent peak. Asian and European markets fared no better, with France's CAC 40 index erasing all its gains for the year. The bond market, often a barometer of investor sentiment, flashed warning signs as well. U.S. Treasury bond yields, a measure of borrowing costs, spiked sharply. This surge in yields reflected not only growing fears of inflation, but also a flight to safety as investors sought refuge in the perceived stability of U.S. government debt. The turmoil in the bond market was eerily reminiscent of the UK's recent financial crisis, triggered by ill-advised economic policies. The synchronized sell-off across global markets underscored the interconnectedness of the modern economy. Trump's tariff salvo, ostensibly aimed at protecting American jobs, had inadvertently triggered a global panic. The world was now facing the prospect of a synchronized recession, driven by a collapse in trade and a crisis of confidence. The trade war's impact was not confined to abstract financial markets. Real businesses employing real people found themselves caught in the crossfire. The Indian pharmaceutical industry, a major supplier of generic drugs to the U.S., faced an existential threat as President Trump threatened to impose tariffs on their products. This move, driven by a desire to bring pharmaceutical manufacturing back to the U.S., threatened to cripple India's burgeoning drug industry. Asian manufacturing hubs, particularly those in China heavily reliant on exports to the U.S., braced for impact. Factories faced the prospect of closure, and millions of workers faced unemployment as orders dried up. The once humming industrial heartlands of Guangzhou and Shenzhen fell silent, victims of a trade war they had no part in starting. The tariffs, far from achieving their stated goal of protecting American jobs, were instead jeopardizing livelihoods across the globe. The interconnected nature of global supply chains meant that a blow to one part of the system reverberated throughout, leaving no industry untouched. The trade war's fallout extended far beyond the economic realm, poisoning diplomatic relations and stoking geopolitical tensions. The European Union, angered by the Trump administration's unilateralism, threatened retaliatory tariffs on U.S. steel and aluminum. This escalating transatlantic trade spat threatened to unravel decades of close economic and political ties between the U.S. and its European allies. Even countries not directly targeted by the tariffs found themselves drawn into the vortex. India and New Zealand, responding to the darkening global economic outlook, slashed interest rates in a bid to stimulate their economies. The interconnectedness of the global economy meant that even seemingly distant nations were not immune to the fallout from the U.S.-China trade war. The trade war, far from being a bilateral spat between the U.S. and China, had morphed into a multilateral crisis. The rules-based international order, already under strain from rising nationalism and populism, was teetering on the brink. The world was entering uncharted territory, and the future looked increasingly uncertain. Section 5. The Human Cost Voices from the Front Lines. Behind the cold statistics of market crashes and trade figures lay a human cost, often overlooked in the grand narratives of global economics. In Guangzhou, a Chinese manufacturing hub heavily reliant on exports to the U.S., factory owners like Chen Li were facing ruin. Orders had dried up overnight, leaving Chen with a warehouse full of unsold goods and mounting debts. His workers, many of whom had left their villages in search of a better life, faced unemployment and an uncertain future. Across the Pacific, in the American heartland, farmers like Bob Miller were also feeling the pain. China, once a major buyer of American soybeans, had all but stopped importing U.S. agricultural products in retaliation for the tariffs. Bob, facing a mountain of debt and a collapsing market for his crops, saw his lifelong dream of passing on the family farm to his son slipping away. The trade war was a story of broken dreams and shattered livelihoods. It was a stark reminder that the decisions of politicians, often made in distant capitals, had real-world consequences for ordinary people, thousands of miles away. Section 6. India, a microcosm of uncertainty. India, with its burgeoning economy and aspirations of becoming a global power, found itself caught in the crosscurrents of the U.S.-China trade war. The Indian stock market, reflecting the anxieties of investors, shed a staggering $170 billion in a single day as the trade war escalated. The benchmark Sensex and Nifty 50 indices continued their downward spiral, mirroring the gloom that had enveloped global markets. The Reserve Bank of India, in a desperate bid to avert an economic crisis, slashed interest rates and downgraded its growth forecast. The Indian economy, once a beacon of hope amidst global uncertainty, was now facing headwinds from a trade war it had no control over. India's predicament illustrated the ripple effect of the trade war, demonstrating how even seemingly distant economies were not immune to its fallout. It also highlighted the challenges faced by developing countries trying to navigate a global order increasingly defined by protectionism and great power rivalry. Section 7. The decoupling dilemma. The trade war, beyond its immediate economic impact, raised profound questions about the future of globalization. The US and China, once seen as inseparable engines of global growth, were now actively seeking to decouple their economies. This decoupling, driven by a mix of economic nationalism and strategic rivalry, threatened to fragment the global economy into competing blocs. The implications of this decoupling were far-reaching. It could lead to a fragmentation of global supply chains, higher costs for consumers, and slower economic growth. It could also exacerbate geopolitical tensions, as countries are forced to choose sides between the US and China. The decoupling dilemma presented a stark choice: a world of interconnectedness and shared prosperity, or a world of fragmentation, rivalry, and conflict. The decision made by policymakers in Washington, Beijing, and other capitals would have profound consequences for the future of the global order. Section 8. A New World Disorder. The trade war, a symptom of deeper geopolitical shifts, heralded the arrival of a new world disorder. The old rules-based international order, painstakingly constructed in the aftermath of World War II, was crumbling under the weight of resurgent nationalism, great power competition, and a crisis of confidence in globalization. The U.S., once the guarantor of the liberal international order, was now actively undermining it. China, emboldened by its economic rise, was challenging the existing order and seeking to reshape it in its own image. The world, caught between these competing visions, faced a period of profound uncertainty. The trade war was not merely about tariffs or trade deficits. It was a battle for global dominance, a struggle to define the rules of the 21st century world order. The outcome of this struggle would determine the fate of nations and the future of globalization itself. Section 9. The future of global trade cooperation or conflict. As the dust settles on the initial volleys of the trade war, the world stands at a crossroads. The path forward is fraught with risk, with no easy answers or guaranteed outcomes. One path, paved with cooperation and compromise, offers a glimmer of hope. It envisions a world where nations, recognizing their interconnectedness, work together to address shared challenges and maintain an open and rules-based trading system. The other path, paved with confrontation and mistrust, leads to a darker future. It envisions a world fractured into competing blocs where trade is weaponized and the specter of conflict looms large. The choices made by leaders in the coming months and years will determine which path the world takes. The future of global trade, and indeed the future of the global order, hangs in the balance. The stakes could not be higher, and the world watches with bated breath.